Hello investors and traders, today I'll speak about 3 dividend stocks that you can buy right now. And let's start with the first stock for today, Bristol Myers, with the ticker BMI. Its current dividend yield is more than 3%, market cap 155 billions. With the 6 years of consecutive dividend growth, BMI has increased its payout by an average of 7% annually over the past 5 years. Indeed, BMI stock is arguably undervalued. Shares trade for just 9 times forecasted earning for the last year. This is slightly lower than the other large cap pharma stock, which trade for between 10 and 15 times forward earning. This valuation may also be too low given the company's projected future earning growth. According to UBS analyst, BMI is expected to report a compound annual earning per share of 13% over the next 3 years. Even if BMI maintains its current multiple, shares could still steadily climb higher in tandem with the higher earning. And let's have a look on it fundamental parameters of BMI. So here we can see the P ratio is 23, so it's not so cheap, but the yield is more than 3%. And the projections here, we can see very impressive projection. The EPS will grow in the expected to grow in the next years, and the revenue, by the way, also 21 it was 46 billions, then it in 3 years from now expected the revenue to be higher than 50 billion. Here, by the way, the payout ratio is 70%, so there is still place to increase it, the dividend payments. And let's have a look on the net profit margin for the last quarter. So the first 1 year ago it was 11%, then 12%, and now last quarter, reported quarters, it was 14%. So the marginality of this company increasing, it's a good sign. The technical analysis here, we can see that by the way, it decreasing channel. Most probably here we broke this channel, and we are going to see the stock a little bit higher. So I can tell you the target for this figure here. So it can be about $90. So in this case, the potential for growth is about another 27%. I think it's very nice, and it can be a nice profit for you. And of course the PS ratio, let's have a look on the PS. It's now very cheap, very low. Have a look on this chart. Historically, yeah, the PS ratio, price per share, was 7, 6, 5. Now it's only 3.3. So the PS ratio is not, in my mind, it's very cheap. So why not to buy a pharma stock from this sector, healthcare stock with a nice dividend yield. And of course it's a huge company, it's a big company. So in my mind, BMI is it can be a nice stock for you. The next stock for today is Philip Morris. It's a tobacco company. ICAS, it's also one of the brands the company owns. So let's have a look on its chart for Philip Morris. So here, look, in my mind here it was impulse, classical 5 waves move. The first one, the second, the third, the fourth, and the fifth. And third is usually the longest impulse in the longest wave in impulse. So here is look very hygienic. And now here as I see, it's a correction, ABC move, so clean ABC move. And then by the way, another hint. So here, look, after correction, after impulse, the correction usually ends in the in the levels of the fourth wave. So if we tell that the fourth wave it finished here, yeah, so most probably also it's can be a very good indicator and very nice sign that here the correction maybe finished. So here I'm expecting to see grow, to see this stock start to bounce, and of course to show nice performance. By the way, the dividend yield is more than 5%, very impressive figures, and the financial position. So PE ratio is 17, dividend yield is more than 5%, and let's have a look on the marginality, the annual. So it's tobacco company, but it's very high marginal business. So here the net profit margin 26, 24, 28, and the last one is 29. So very high marginality for this business, and the expectations also is very good, very high. The EPS, earning per share, expected to be very stable. And let's have a look on the revenue. Yeah, by the way, if we look for the revenue for the last 7 years, it's usually above 20 billion bucks, and for the future few years expecting to be a little bit higher than 30 billion. So of course it's very stable business in my mind. So if I'm personally I'm hold this stock in my portfolio, of course in my dividend portfolio, 5% dividend yield, nice performance, nice marginality, and what can I else? What can I add to this? That this stock I like. Of course, it's not my favorite stock, but Philip Morris, it's I think it can be a nice stock to hold. And the last stock for today, it's Verizon. Verizon, it's a dividend aristocrat. It continued to increase the dividend payment, if I'm not mistaken, more than 40 years. Current dividend yield is more than 6%. We can see that it's traded last 10 years in the range, and now we in the lower border of this range. So why not try to buy the stock? By the way, pay attention here. The RSI, the momentum indicator, is 33. It's telling us that now the stock is already oversold. Last time we saw the momentum indicator so low, it was about 2008, the dot-com crisis, the global financial crisis. So now it looks very nice, and not expensive. Why not expensive? Because here its PS ratio, price per share, is only 1.2. Historically, usually it was 1.6, 1.8, even 2, but now it looks really very cheap. And trading at a heavy discount, 8 times estimated 22 earnings. If Verizon can deliver better than expected results, shares could continue to climb back near prior price levels. Even in a partial recovery coupled with the high yield payout could produce fantastic total returns in this year for investors buying today. So Verizon is my third stock for today. If you like dividend stocks, stock market analysis, technical fundamental analysis, don't forget to subscribe to my channel, press the like button, and of course see you on the next time.